Hello friends, a cause of celebration. Nifty has reached to 17,000. Now the bigger question is it going to sustain above that or not? So every time this question was asked when Nifty has crossed 11,000, 12,000, 13,000, 14,000, 15,000 and 16,000, 17,000 has been a very quick journey. In the month of August, we have seen 16,000. At the same time, we have seen 17,000 as well. But yes, 17,000 is a milestone for Nifty, and yes, it calls for a celebration. Now, Nifty has reached to 17,000 and still remember the days like 25th of March 2020 when the Janta curfew was announced. The period was little gloomy, uncertain kind of days. And there's a saying that goes like the bull market is built on a walls of worries. And that's how we have seen a fantastic dream run kind of a thing. And Nifty has reached to 17,000 mark. Now that reminds me of two specific shopping lists that I have shared in Diwali 2020. And one was obviously for the Prime Group members to the Growth Model family. And another list was for all the uh, viewers of Money Control. At that point in time, I had created a specific webinar, a special webinar for Money Control. And in that webinar, I had given a specific pick of IT as well as pharma and some of the NBFCs as well. So today we are going to review those picks. Now see, obviously not all the picks have worked. Majority of them have worked and some of them have not worked as usual. And let's observe, see how the stocks have performed. Is it a right time to book profits? And if yes, then how much money you should take off the table? Second most important point, if some of the stocks are underperforming, then how do we deal with it? So these are the primary aspects that I'm covering today. If you have anything specific in your mind about your portfolio, about the performances of the stocks that you're holding in your portfolio right now, do write to me in comment and I would be happy to answer your questions. Secondly, there'll be certain stocks which are underperforming as compared to Nifty. And how do you deal with that? So that is also one aspect that I'm going to take care into these session. Now let's start with GMMP Fowler. Now let me show you this list from the past or the Diwali session. The actual list, the original list, which was handwritten here, which was shared on 14th of November 2020 with the Growth Model family. And this list was shared on WhatsApp. Let me just show you. Yeah, so this is the list. Just to save time, I have taken it out. So this is shared on 14th of November 2020. And this is the original list. The name of the share and the quantity which is mentioned here. Roughly the stocks which were trading around 2000 rupees at that point in time, I have bought about 50 quantities just to confirm that it will amount to about 1 lakh rupee. Okay, so we are starting from GMMP Fowler, and to just make things easier, this is my date 14th November 2020. If I enter, this is where the cursor is, this is where the price is, and from here if I check, the growth in GMMP Fowler is only 15%, right? So GMMP Fowler, we were expecting lot many things to happen, but it has not happened. So GMMP Fowler is a uptrending stock, and right now as well that uptrending structure is still there. So even if you feel like holding on to this stock, you may hold. So if you do not have this stock in your kitty right now, you can buy this stock because the stop loss is absolutely small and this stock is kind of forming a higher low. So what do I mean by higher low? From here, it has formed a high, a higher low, again a higher high, and this is a higher low level, which I feel that it is look like a higher low. And from here, if your trading system gives you a buy signal, just go ahead and buy. Then the second stock is Galaxy Surfactant. Galaxy Surfactant has given a fantastic run. And if we check, so this is where we had bought Galaxy Surfactant 17th November. So it has given about 64-65% move. So that's a simple mathematics. I had invested about a lakh rupee and grossly I'm getting a 64% returns over here. What can be the strategy? Let's say if I'm holding 50 shares, I can get rid of 25 shares. I can take some money at home. Let's say I take back 80,000 rupees. So my investment in these stocks is going to be only 20,000 rupees, and the remaining will be the profit that I have generated on this stock. So even if I'm losing some of the profit, I should still be okay with it. This is one strategy. Do consider if your stocks have performed greater than 50% ROI, then in that case you can consider selling, let's say 30% or 50% profit booking that can be done. If someone feels like I should book the entire 100% of the quantity, I'm happy content with 60% ROI that I have generated, absolutely fine. Just go ahead and book profit. Nothing more soothing, satisfying than booking profits. So you can go ahead, book profits. You'll get another opportunity at a dip, and you can again buy this stock at a later stage. The next stock we are talking about is Garware Fibers. Now, the Garware Fibers is an unusual stock. It has given a good run, dream run kind of a thing, but at the same time, it has started correcting. This is what I am uh, fearing for, or you can say I'm cautious about. Not fearing for, but cautious about. And if this is going to take away some of your profit, then better to book at least 50% of it. That's the simple logic. And if with this logic, now this is 14th November, and from here, if I check, this has generated about how much? 40%. So 47% ROI, roughly close to 50% ROI. So if I had invested a lakh rupee, it has turned to 1,50,000 rupees. I can take off 75,000 off the table, sell 25% equity, and hold on to remaining shares. So my investment would be only 25,000 and remaining will be profit. Give it a thought. Then Alkali Amine. Alkali Amine had also given a dream run. So this is Alkali Amine. This is one of by far the best pick, I believe. And Alkali Amine has also started retracing. The reason for shooting this video is that there is a retracement that can be seen across the board. Even Nifty at 17,000 has given a dream run, a fantastic kind of a run. And there are thoughts saying that the September month will attract some correction. I'm not talking about the market is topped or something like that, or book all the portfolio and run away, nothing like that. But be cautious. It is always advisable, it is always wise to take out some profit of the table. So Alkali Amine has given about 200% returns. So the investment at the beginning, the price where we invested was about 1370, and from there right now the price is at about 4100. So you can again take out, let's say 50% or 70% profit here, let it correct a bit, and then again you can invest in a timely manner based on your entry criteria. This is one stock, Escorts, which has not worked, and I had done a review session, you can say, or a follow-up session wherein I had mentioned about that Escort stop loss got hit. So Escort has not performed as expected, and this is where we had bought Escorts, and the price right now is below those levels. So this is one stock which has not worked as per expectation. The next stock is Relaxo, and Relaxo has given fantastic returns. Bata has not given such a good returns, but Relaxo has performed well. Probably the reason is Relaxo is active in a tier 2 cities or tier 3 cities, and that must have contributed a lot in the growth of Relaxo. And Relaxo has given about 60% profit. That's a good healthy profit. Then there's a stock called Moltech Packaging. This is the eighth stock that I'm talking about. And Moltech Packaging we had bought around 300 rupees. We had bought 100 shares of Moltech Packaging, and Moltech Packaging has given fantastic returns. Again, there's some correction that can be seen. The mid cap and small cap, they have started correcting, and this can be one of the reason. This can be one of the warning sign, you can say, wherein you need to book profit. Again, this has given average 60% returns, and majority of the stocks have given returns between 60% or so. Only alkali amine has surpassed my expectation and given about 200% returns. So that is a fabulous kind of a pick. So these are the 8 picks that I had shared in Diwali Muhurat trading. And then from there, let's say when we talk about the money control session. So in money control session also, I had categorically suggested that the next 4.5 runs are going to be a dream run for bull. And that dream run, I would say that it has just started and we are seeing the effect of it. IT is at all time high, and the stocks that I had given in IT were Coforge, HCL Technology, Tech Mahindra, Infosys, TCS, all these stocks. Apart from that, I had given Bajaj Finance. Then there was Kotak Bank, I believe, and Reliance was there. Then Pidilite was there, Asian Paints was there. Let's have a look at these stocks. So Coforge, let's start with Coforge as with the order. Now the money control session was 2 day prior to the Diwali Muhurat trading. That was the whole purpose of it, and it was on 12th of November. So this is where we got Coforge, and Coforge has registered returns of about कहाँ गया? So this is the tool, and Coforge has given returns of about 116%, and this is also a good level to book. See, Nifty IT right now is in overbought zone on a monthly chart, so there can be some retracement or some consolidation. So this can be a good time to book some profit and liquidate the profit, take benefit of that profit, and then at an appropriate time we can again go ahead and invest into your choices stock or the stocks which we feel better at that point in time. Then there is Bajaj Finance. Again, these are fantastic picks. I today only I got a message from couple of traders of growth model, and they were talking about Bajaj Finance. They have got returns of about 200%. Then there was TCS, Divi's Laboratory. All these stocks have given fantastic returns, and people were very happy about it. You know, the equity is a process of comfort, and that's how it has to be seen. So the buying in this Bajaj Finance was around here, and from these levels of 4,700 it has gone to 7,400. So another 56% ROI in Bajaj Finance, a fantastic ROI. Then comes Infosys. Now in Infosys, again in Infosys, all the IT stocks, they have performed absolutely well, immaculate. And from this stock, IT is showing, now this Infosys is showing some sign of retracement on a weekly chart, and that could be a cautious. About 50% returns in Infosys, a good time to book profits if you have not done so far. Minimum, I feel, even if let's say someone is consider this as a long-term investment, right? Like coffee can invest in, never to sell those investments. Even in that case, just take out some profit. थोड़ा सा book कर लीजिए, it will be better. If you find it at a lower level, then you can go ahead and buy them again. But booking profits is, I think it is mandatory, because you have made a lot of hard work, and it will be wise to book the profit before it's too late. See, one thing is for sure, no one can time the absolute bottom and absolute top, isn't it? So if someone is claiming that he's consistently timing the bottom and timing the top, then either that person must be God or that person can be a fantastic liar. And we are none of them. So in that case, I feel that if we are getting a sizable profit, then why not take some profit off the table, right? So that is the core principle, core thought process. And all the stocks, if you can see, has given us more than 50 to 60% returns on the investment, and that calls for a partial profit booking. One more method that I'm going to suggest to you guys is that you can have, let's say, a 5 to 7% uh, trailing stop loss. A trailing stop loss is in a way a safer way to book profits. And let's say you're allowing the stock to correct by 7-8%. If it corrects more than 7 to 8%, then in that case you are going to book your profits. So you're allowing some margin for the stock to move in those particular area. That is again another concept. Then HCL Technology, again a fantastic pick. HCL Technology has given a good rally. So from these levels, HCL Tech has given about 40-41%. I think Tech Mahindra must have given better returns. See, all these stocks were mentioned. Some of you might feel that I'm just haphazardly going through various stocks and not talking about any analysis at this point in time. But if you go back and check the Nifty IT index, you are going to realize that Nifty IT right now looks overbought and it might start to consolidate. So, you can just see it is right now at 70% returns on the investment and can be a good time to book some profit. And don't think, guys, that I'm stressing a lot on profit booking, but sometimes it becomes mandatory to remind uh, again and again that this can be a better time to take some money out of market. And then again, when you get a dip, something like this, that can another opportunity. And then on the basis of that opportunity, on the basis of that confirmation, you can enter again. So this is where I can see InfoEdge or Naukri.com. It has given fantastic returns, 54% returns here in InfoEdge. Divi's Laboratory, I don't feel like selling Divi's Laboratory. You can hold on to Divi's Laboratory as long as you want. But Divi's Laboratory has also given us better opportunity. In Diwali, I had mentioned specifically about a dip that is impending, and that dip we got in certain stocks, something like Divi's Laboratory or Naukri.com or Tech Mahindra, and those dips were fantastic level to buy for a next target. We had given a buy signal on the in the month of November, so I'm going to consider from those levels only what kind of a returns that has been generated. So overall, if you see IT stocks, all of the IT stocks and also pharmaceutical stocks have generated about 40 to 60% ROI. Divi's Laboratory is not an exception. Asian Paints not fared as well as better as I would have loved it to be. So after this phase, it has given a dip as expected, and after this dip, it again price came to the 11th November level. Price again came back to November level, and from those levels, if you see, the rally was fantastic in case of Asian Paints. So again about roughly 50% ROI in case of Asian Paints. Good time to book some. Last two stocks, Pidilite. Pidilite was fantastic. And you know Pidilite, as you can see from these levels, Pidilite has given about 40-45% returns on the investment. The last one, Reliance didn't perform as expected, and that is the reason I have kept it in the last position, one of the stocks. So here, Reliance has given only 10% returns, but right now it is already ready, and I think right now the target of Reliance, that 2300 is completed, and I'll be a little cautious about this stock called Reliance right now. 2300 is a level. I was expecting a lot from Reliance at the point when I conducted this money control session, but sadly Reliance has not performed so well. Right now the target is completed for Reliance Industries, and 2300 can be a make it or break it kind of a situation, which will also give direction to Nifty, right? On this thought, guys, take an overall view and you will realize that mid cap and small cap have started correcting. At some point in time, the large cap will also start correcting. Do you want to wait for that day when you see everything is painted red and have an exit plan? So I am not urging you to book profit at this point in time immediately, but my simple thought process is that you should know at what point you are going to exit and have a plan to exit. That's all the purpose of this video is. And I think if you have seen the entire video, you must have realized that equity investment is a sure shot way by which you can earn consistent profit. And that's the way to go about it. Thank you so much.